Foliko Live. Travis Nixon and Tyler Tucci with you this morning. We are an AI shop powered by news from around the world. We take AI, we read every news article we possibly can, and we use that to make a view of the market about where companies are going. Today, we're focusing on earnings. So we've got some really interesting things coming up for you. JP Morgan facing some troubles, BlackRock, Bank of New York Mellon, United Healthcare, Progressive, some really interesting things coming up. We see some bearish times ahead for these tickers. Stay tuned to figure out why and what is the evidence and data showing us that there could be some potential great trades to be made this week for those tickers. All right, let's get right into it for our weekly earnings roundup. Weekly earnings roundup, Tyler. It's my favorite time of the week because we found when we were making our AI models that there was a lot of really cool stuff that we could do, very predictive things happening when you read all the world's knowledge base, you ingest it into some very powerful statistical techniques. But what we really found was predicting earnings was one of the most powerful and accurate things we could do above and beyond anyone else, right? So there's some pretty incredible trades we've made. You'll recall for our viewers a couple weeks back, Rite Aid, we slammed that out into left field, right? Like that was a home run on Rite Aid. Time and time again, we keep coming in. Micron, we had some great movement with Micron. We saw that really come out and bear some fruit. This week, Tyler, what are we seeing, buddy?
I mean, it's not good, and I keep saying this. I hate this bearish person that we have to be, but we're data driven, and that's just how it works here. Aside from some of your consumer staples, just to give a teaser, we don't think this is going to be a good week of earnings at all. We have a couple setups that we think set up similar to Netflix last quarter, where the market was really wrong-footed and price, not to say cratered, but cratered. So we'll talk about those in a bit. We'll talk about some banks. But given that this week is mostly about banks leading off, and kind of people have always looked at that as a leading indicator of how healthy things are going to be. You get a little bit of everything. You learn about lending activity. You learn how the trading and banking side did. How was issuance? How is what's the IPO pipeline look like? Things like this. So we have some pretty nasty and almost non-profitable earnings forecasts for some of these banks, and I'm going to let Travis tell you kind of why in a second. But I just want to say one thing about these. So we're going to publish and show our forecasts, even if they're very non-consensus and we're going to look stupid. We're much more willing to do that than look at what consensus is and maybe shade our forecast back so we're closer to the herd and we don't look dumb. We are going to look really stupid on some of these. Some of these we're going to look like we had tomorrow's newspaper. But just as a disclaimer, we have non-profitable quarters. Was it for Morgan Stanley, I believe, potentially? I'll let you talk about it. But yeah, I just want being very upfront. This is the first show of the earnings season. We are willing to look stupid. We don't think we will too often, but we are going to give you our the raw forecasts and not some goal seats number, so that we can kind of save face later. If we're going to look dumb, we're going to look dumb.
Yep, absolutely. All right, so shall we just jump right to it and give the actual raw forecast then? All right, let me pull my screen up. Okay. Oh, there we go. All right, so what we have here, I'll zoom in. These are the tickers that we're focusing on this week on our coverage list, and they're releasing their earnings. And I've sorted it in our predictions difference from consensus, right? And so these are the earnings per share that our models are seeing coming out here. Starting at the top, we've got JP Morgan Chase. We've got the biggest delta between our earnings models predictions and where the street's consensus is. Now, the reason why we're highlighting difference from consensus is this is where we generally see the most opportunity. When we see that large delta, that's your chance to get in, make a trade, that the rest of the street's not seeing. So obviously that is not going to be priced into the current price, right? Now, what's interesting here is that as these banks are releasing a lot of their earnings, like Tyler said earlier, that's going to teach us a lot about what's going on in the economy. I personally believe that a lot of the recession risk being faced right now is not fully priced into the market. As soon as these banks release, Tyler, would you agree that a lot of those risks would be more closely matched with what's actually going to happen? So this is going to be probably a big delta to seize on if that's going to be the case.
Yeah, I mean, if in all these earnings calls, the bank CEOs are going to come out and in their forward-looking comments, kind of say some nasty stuff. Yeah, I mean, we really could start to push lower, but I think it's really going to have to be an individual earnings by earnings basis, and this is going to be a huge show me quarter. So I think traditionally sometimes you have an earnings miss, but the stock's up 10%, for example. I think if you beat the stock goes up. If you miss, the stock's going to go down. I think we're in the repricing to reality part of the game. So I definitely will be listening for what these guys say. They generally have good ideas when it comes to, and sometimes not good ideas, right? I mean, sometimes they're just completely wrong, calling tops and bottoms and rates and stuff. But it will be instructive to see what the financial sector thinks of things like lending and that.
Gotcha. So let me talk to a little bit about this model, because this model is pure data science. We have not layered any of our judgment, any of our facts and figures on top of this. This is pulling in. Remember, last week we gave a full tutorial on Foliko health scores, what those are. That is us reading millions of news articles in the time it would take you to have a cup of coffee, extracting all the insights about the company, the economy, the market, the sector of which a company operates, right? And we're able to take those insights and also include a lot of those quant metrics that you would want from companies. What were their facts and figures last year? What have they been coming out and releasing in terms of guidance for this coming quarter? And doing a lot of those time series types of forecasting, layering that on top of what our AI is saying about the news and what's going on in the world around this company. And then we bring that together to form one singular view of what's going on in that company. So JPM EPS 94 cents a share, that's coming out of a lot of layered analysis telling us that they're going to have a miss compared to what the street expects from them. Okay. But now on top of that, we can layer our judgment to pick out some of the best picks. So Tyler, where do we go from here? Once we have these estimates and these predictions, what's next in terms of our analysis and what we're seeing?
Yeah, so this is one model. We found this, very good at predicting earnings. Even better, I would say, at just nailing numbers is getting directionality. So when it's sometimes we have crazy low forecasts and those don't realize, but it is indicative of a miss and the price goes lower. So I do think that's interesting. I'm gonna have to change my screen share here.
Yep.
So the other side of this, and this is what I like to use Foliko for, is so then we have another model, so we can now consult two different models, and basically what we are looking for in trades we're going to talk about today is that both models agree. But from just what you had given me, then we can come over here. And so for example, this is JP Morgan. So we have a pretty nasty, nasty miss from our earnings model there. But to me, when I look at the health factors, it looks like, price already kind of knows that. The price has already come significantly lower already. So yeah, I mean, we definitely think that there is some more room for downside. But when I think about, this is how I check risk reward, I want to see the earnings power get completely dislocated from price. And I'll show you what I mean. So on the other side, so this isn't one that our earnings model agrees with. Our earnings model thinks, earnings are going to kind of be in line. But I do love to monitor going into earnings weeks, these, alligator jaws, divergences, whatever it is, where price has gone completely one way and earnings power, completely disagrees with that move. We saw this happen a ton last quarter, and usually price after earnings resolves in the direction of where the earnings power is. So that would mean in this case lower. We're not going to.
Real quick, Tyler, I want to jump in on this, on one thing that's not in our model and what you might be seeing disagreement from the model I just showed versus the picture you're showing. The model that I showed does not have price movements baked into it.
Right.
That's based only on quarterly data, right? And doing that time series, extending it out, and then what do the current health scores look like? But that's not talking about price movement. So the fact that this price has charged upward for the past month. I'm sorry, go ahead though. I just wanted to throw that in.
Right. And it's important to realize that we're using two different models here to confirm, as opposed to just kind of, pointing and going with one and allowing that to be the case. And I actually think that that's a good thing, that the general earnings model is price agnostic, because then you don't have to explain, the 1 day or 1 week movement. You can just make a, prediction with blinders on, which I think is helpful because it's only one model. Then we'll take the blinders off and go on Foliko. So Conagra brand is not one that we're going to list as a, official trade of the week or anything like that. But I do think, I monitor those kind of divergences. I think that is what Foliko is good at. But enough of trades that I don't think are a good idea. How about ones that I do? Here's one. So here's an instance where the model and the both models agree. So we have a pretty ugly earnings forecast, and the recent price movement was not at all validated or verified by a subsequent moving in earnings power. So, I would have liked to see a bigger spread. I would like to see, earnings power, way down here. That would increase my conviction. But I think given that both models agree, and when I looked at the money put pricing, it's not, it's about, I think, 3% downside in there safely to break even. I think that kind of thing could come to reality quite easily, given what our earnings power sees and what our model sees. So that is one that we're going to raise our hand and make a call on, and say we think UNH is lower. We like using the at the money put as a synthetic short, and we'll just take the performance on that as our performance for the week on that one. I think that is, in terms of both models agreeing, I think that is our best idea. We have other good ideas in here, and I'll share the spreadsheet in a sec here. But I think that is, if you're looking for what does Cinerai plus Foliko data do well, and how can you merge them, it's that right here. It's UNH.
So now, Tyler, go if you would go to UNH's homepage. Yeah, because this is the third model that we like to bring in. Look, so Foliko, not only does it come in and make these health scores that are very, very helpful to make these earnings predictions, but we also come in and we make a price prediction for every company on our coverage list. Again, this is a different AI model, and we consult these AI models, each one of them like a different counselor, educating us about the market. Each one looks at the market a little bit differently, right? So you can start when all of these alarms are forming a consensus view and saying, I see it going this way, then that's something really you need to pay attention to. Now, Tyler, do you mind dragging the 1 week across the 12, 8, 4 week and everything like this? Now, something you'll see is that little blue P is going to start crawling across the screen. You'll notice that we actually have different models predicting different time horizons. So this is not a time series forecast. Each of these are different regression models at different time intervals in the future. And so what's interesting is when all these models disagree, you'll get a really bumpy path forward. That shows that there's some uncertainty going on there. But when all of these models, the 1 day through the 12 week, agree that a company is going to have a lot of friction and headwinds, especially when it's a gentle sloping curve like that. I mean, these models don't talk to each other. There should be no real explicit reason why these models are saying the same thing. But when they do all say the same thing, this is a signal that is worth trading on. I know I myself, as soon as we wrap up our morning broadcast today, I'm going to be trading on this. This is an interesting one because we have our earnings prediction model. We have our earnings power factors and the alligator jaws appearing. So we got the shape truth there. And then we also have all 7 of our price prediction models coming in and forming a view about United Health Group. In other words, ladies and gentlemen, we have picked up on a trend here that I really think is worth paying attention to. Right now, we're not financial services, we're not trade advisors. Do this with your own duly performed research and everything like that. But this is an interesting one to keep an eye on. Tyler, do you have a spreadsheet that we can look at? Like, what is the actual movement that we're looking at here?
Yeah, let's see. So a couple things. One question. What's the downside catalyst for UNH? Well, we think it's earnings. We think it's earnings. We think earnings are Friday. So, we think you can enter this, given the price forecast, you can enter this, various expressions now. But, if you want to make a specific earnings trade, you probably should do it at the close on Thursday if you want to just isolate, purely earnings.
But remember what happened with Rite Aid too. So this is something that we are still exploring. You're right. Our biggest value delta comes right before earnings release. But what happened with Rite Aid is we made that call early in the week. That stock price followed our prediction the whole week. And if you had gotten in earlier, you would have enjoyed a much better delta than if you had got in right before the close. Myself, I'm probably going to get in today and then maybe increase that position as time goes on. I'm not positive. I'll have to have Tyler coach me a little bit to make sure I get this trade just right. But Tyler, yeah, how are you looking at this trade?
This might be a do half. If I'm gonna buy, I was looking at the money puts for UNH, which I believe is the 520 strike. Those cost about 9. So maybe that's one of the kind of thing where I'll buy, say I'll buy 10 today, and then I'll buy, depending on how we're doing, I will either add to the position on Thursday, or if we're right between Monday and Thursday and I've already realized some profit, I could potentially roll the options down, which is to move to a lower strike at a cheaper premium and then take some money out of the trade. So there'll be a bunch of different ways to look at it, but just off the top of my head, this looks like a kind of do half setup, given that it's not just an earnings trade we have going on here. We think earnings are the catalyst and earnings are going to be bad, but we have a lot of other reasons to believe that UNH and healthcare in general is something, we want to stay away from on the long side at the moment.
Tyler, question for you that's just popping in my head right now. So we haven't done research on this particular aspect, but if all these banks go lower and this says something negative about the economy, wouldn't that in itself be a catalyst to cause basically the market itself to go down?
Oh yes, I mean there'll definitely be some sensitivity on general indices to these bank earnings. Absolutely, it just depends how much. This is a quant show and not a trading positioning show, but some of the measures that I look at in terms of length in the equity market are starting to suggest that there's not too much of it left. So anytime a market becomes either oversold with no longs or overbought the other way, you can really kind of see some upside. So that is just kind of one thing that I'm cognizant of. Despite our very out and out bearish forecast, is how has that bearish call changed in the context of what's going on in the general market? I mean, I think it's remarkable that equities have performed this badly and the VIX is below 30, for example. And there's good reasons for that, right? Because there is, oddly enough, I believe it was Nomura who published this, that there's more demand for right tails and upside hedges than there is for downside hedges. I mean, so we're overall bearish still, but it's just, I start to think about things like, what's positioning like, what are the other needs like? So yes, long story short, yes, I do think there could be some price sensitivity based on banks, but I think it would have to be, outsized. I think they would have to really say something as opposed to moving on nothing, if that makes sense.
Gotcha. So now do you mind zooming in on your spreadsheet a little bit here? It's still a little bit unclear for me on the screen. There we go. Now we've got a beat or a miss call on every one of these tickers, but not all of these are things that we actually want to trade, right? Like that delta needs to be at a certain level, our conviction. We've got column J on whether or not that earnings health sign is coming in to actually show something interesting. Do you mind highlighting for us which ones you would actually trade?
Yeah, I mean, my two favorite based on, if I was, and I am, looking at this in a programmatic, systematic way in terms of just earnings betting, based on those divergences on Foliko. So I will do, some kind of something with these. It'll be more experimental in size than UNH. That's for sure. So let me bring this up and I will change screens. Okay. So for instance, Progressive, this looks actually like a really good one. If I could overlay some technical analysis into it, it's a very good location for a short. Just in general, if I knew nothing about the company, nothing about earnings or, anything, I would say, ooh, interesting location. Tell me more. And when I am told more by Foliko, not great. That price took off and earnings power did not. So this is the kind of thing that we would expect a nice snap lower after the earnings report. We're not as confident because both models, don't necessarily say the same thing. We like when they both say the same thing. That gives us more confidence. But this model by itself, we have, say, out of 1 to 10 conviction, Foliko has an 8, or this could even be a 9, but the earnings model thinks it's a 5.5. So it's interesting. It's something, we continue to monitor these divergences. I think they're very important. But, if we're thinking about what are your best ideas, I think this would be a secondary one.
So if I'm interpreting what you're saying, Tyler, what it seems like to me is that we've got this alligator jaws shape here. Do you mind tracing that with your mouse and just showing us exactly? So what it seems like to me is the earnings for Progressive over the past month don't justify the price rally.
Right.
And that's really what it's coming down to, is that the earnings have stayed at a certain level. The price has just absolutely exploded in the last little while. We think that it's going to return back to that level.
Yes.
Really? Okay.
And if we can take a look at, and this is something I highlighted last week, just on an overall market-wide basis, it has ticked up a little bit since we talked about it, but this is the lower end of where we've been, in 2022 going into these earnings. So, we'll monitor the shape of that line, but just in general, across all these forecasts, it's not great.
Look at the 10-week, because this is one of the cool things about Foliko, is that you can adjust this out in the rolling time horizon, go to that 10-week, and that 10-week is really indicative of trends happening in the market. And look at that, coming into this new earnings season, that's not a shape you want to see. I think that means that the market's going to face some pain this quarter. And look, it makes a lot of sense. The economy's really been in the tank. March through June being a rough time period, especially with inflation going on. A lot of companies held back on hiring or just started letting employees go in general. I know that the employment market is strong right now, but I think there's a lot of indicators to show, especially in Foliko, that this is going to be a bad thing. Now, I just want to point one thing out for all of our audience. Foliko, what you're seeing right now, this dashboard, we're able to make a lot of smart trades with this. But don't let it just be us. Everyone is now able to go in to www.cinerai.com and subscribe to Foliko today. You can come in, get all the same analysis, all the same numbers that we are. Remember, this is an AI-powered trading platform where we read all the world's news so that you don't have to. And those AI models are able to come in and form a view about what's happening for over 1,100 companies on our coverage list every day. We make stock price predictions using AI-powered algorithms. We create these health score indicators that come along 6 different flavors, earnings power being one of them. That's what we're focusing on today. But all of this, and then we show the news articles that come in and help us form a view on what a company is doing. Subscribe to Foliko today. Everything we're saying is going to make a lot more sense, and you'll be able to take the insights from this show and start forming your own views about what's going on in the world. So, Tyler, I think that shows some really interesting things for us this week. I think UNH and Progressive are very interesting for me. I think for myself personally, seeing such a delta on the JP Morgan numbers between our EPS estimates and consensus, that's something that I personally I'm probably going to jump into, see what happens there. But I think tomorrow we can give a lot more coverage on banks, what's happening there with our forecasts, and what that means for the market just generally. Tyler, what do you think about tomorrow being a little bit more in depth in the banks, what our earnings forecasts are saying, what our price predictions are saying, and just going a little bit deeper in that?
Yeah, that makes sense. And then we'll do some of the regional banks too. You know, the Foliko thinks all banks are interesting. I mean, we have some, I think, as we've presented before, some, pretty decent downside on UBS, Credit Suisse, and DB. So we think European banks aren't out of the woods. We have, I believe it's Huntington Bank shares down 25% on a 12-week forecast. Yeah, so I think it'll be, definitely worth watching because we have some calls in what is, generally kind of a boring sector.
Awesome. All right. So this has been, let's come down to just our faces so we can talk. This has been Foliko Live. Thanks for joining us. We're here every weekday, 8:30 a.m. EST. Join us each morning to kick off the market, and we're going to be bringing you content left and right. Now, for us, intellectual honesty above all else, which is why we're always going to show you the facts, figures, and numbers. We're going to tell you when we're making a definitive call, and we're going to call ourselves out anytime we get a miss. I need to get out and do some trading before the market opens. Thank you for joining us. This is Travis Nixon and Tyler Tucci, and we'll see you again.